Ahem. Hey, I guess we ran out of music, yo. I'm just doing one more Nespresso. Hang on. Whoa. All right, well, that's going. Me. 20 dwarves, 20 dwarves, 20 dwarves. In sooth, I know not why I am so sad. Welcome to Forex.Today. It's Wednesday. ADP, oil inventories. Gee whiz. Oil inventories, ADP, lots of very interesting things going on. Especially if you're watching the Treasury market. That's interesting, huh? So anyways, thank you for being here. It's 9 o'clock in the morning, New York time, about a half an hour before the stock market opens. It's a beautiful summer day, a good opportunity to be shooting at rabbits. So thank you for being here, and let's get on with it. Let's go. Sorry, man, I'm looking for my glasses. I can't find glasses. What's going on in the world? Anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but it's always a good idea to stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader just like you. I probably started dabbling in Forex around the year 2000. I'm guessing somewhere in there. And back then, it required a lot of money to open an account. You couldn't use a credit card. You had to wire, so it took multiple days. Brokers were unregulated. Spreads were huge. Volatility was nuts. You would see one candle jump 200 pips in a second. It could be for you. It could be against you. And many brokers were unscrupulous, so many went out of business and stuff like that. So, wow, what a weird time. And then, of course, by the time you wired, 10 grand to your account, guess what? You didn't have any charts. There were no charts. That didn't include charts. So you had to pay hundreds of dollars per month for charts and then analyze things on your charts and then go over to your trading platform and place the trade. And then guess what? You couldn't see your trades on the chart. You couldn't see your stops on the chart. So, oh my goodness. And here you are starting out in this thing called Forex. You could use a few $100, swipe it on your credit card. You're ready to go. Everything, right? Volatility is low. Spreads are narrow. You're paid great swaps. Volatility is not crazy. You get charts. You can manage your trades on a chart. Like, you might take this for granted, but, I still don't. So anyways, this is a great, wonderful time to become a foreign exchange trader. So welcome to Forex.Today. The raison d'etre, the overriding goal of this webinar today is for me to teach you how to plan your trades in advance. So today you might be planning for tomorrow, you might be planning for next week, you might be planning for the rest of August, let's say projecting the next couple of weeks out, or you might actually be thinking about the long-term fundamental trends and macroeconomic policies around the world that could lead to currency trends from now to the end of the year, or maybe several years. And I'm going to teach you how to do all of that. So anyways, thank you for clicking the thumbs up button to tell YouTube this is quality content. Thank you for asking good questions. I'll do my best to answer them, address them, that kind of thing. And also I'd like to thank Traders Way for being part of our community as well. They're a foreign exchange broker. You're a foreign exchange trader. You will need to put real money into a broker if you're going to be a currency trader. You will have to choose. Some choose the cheapest. I don't recommend that. And most of the time, the super cheap brokers are lying to you, and they slip you anyways, and you end up paying more and getting less. So don't be silly. What you want to do is choose a broker that you trust. Simple enough, right? So anyways, Trader's Way has earned my trust many, 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 many years ago. If you open up a demo account today and practice trading and developing your skills and using the things I'm teaching you in these webinars, then maybe, just maybe, they can earn your loyalty and respect and your trust as well. So that when you're ready to trade real money, you say, hey, I already know who my execution partner is, and that is tradersway.com. Okay. Hang on, the fan is going off. I think what's happened is we got one of these fancy thermostats. I think because it thinks it's August, nobody's here, but all of a sudden, like, it's hot in here all the time. I don't know why it shifted. So let me go turn the fans back on. All right. So here's what I think is going to happen next week. Okay, this Friday is non-farm payrolls. Next Friday, how would you like to get together on the rooftop of the Harvard Club in New York City in Midtown Manhattan? You guys want to get together? Maybe have a couple of cocktails, a couple of appetizers, and just shoot the breeze. Anybody interested in meeting up with me? It's a private club. You can't get in unless you're invited. I'll be spending a few days there. I think Wednesday night, Thursday night, and Friday night, and I'll be leaving Saturday so I can get back to my family. But I just want to extend an invitation if you happen to be in Manhattan on a Friday night. Johnny and I are going to tear it up, paint the town red. Is that right, Isaac? That's good. Okay. Well, Hope is going poetic, waxing poetic this morning. Very cool. All right, hang on. I got everything out of order. I got to have this over here. I'm looking too far right to see the chat. Okay, that's better. Okay. Long drive from Holland. Man, I'd like to go visit. I have a lot of Dutch friends, so I think that'd be a fun visit. All right. Here we are. Oh, yeah, I think we just left off here. And what we had talked about yesterday, we had somebody asking if it's possible to make money trading Forex. And, okay. So here we are. You know, these are past setups. You can see there's a double top. Maybe there's a bottom here. The other thing that I have is I have this marked up. Okay. When you're consolidating like this, and you can see like this is a 1 touch, this is a 1, 2, 3, 4, 5 touch. So this is not the same as the other one above. Okay, so we know that. Also, you should know how to trade in a range. Okay, you're going to filter a lot of this through your trend analysis, meaning on this time frame you decide to be a bull or a bear. Okay? And bears are going to try to sell it off the top, and bulls are going to try to buy it off the bottom. Okay? And you have to say, what is the bigger trend? Is this still in play? You have to ask yourself, what is it that you're trying to achieve? Are you a bear? Okay. Now, you'll notice changing market conditions, that this went higher than a standard swing trade, right? But we already know there's consolidation here, so that's not unexpected, is it? Okay. And really what we're looking at is you should have known, or I guess you should, maybe not should have, but 52 is the number that we can see. Okay. The 52 is the number, and the number is 52. So this is what we're playing here, isn't it? Now we just bounced off this 51.50. Cool. Next level, 51. Okay. A stubborn bull is going to look for reasons to buy it off the bottom. Hua? And they're also interested in buying this. As a bear, you sell here, you don't sell here. You see? So if this, well, the first thing is you can take profit here if you're a bear and you're worried about the upward move, but you know a bull's going to do it. Also, the other side here is you could aim for this and just say, I did all the work up here. You can't sell at X and you can't sell at X, but at X you can take profit. Here you can take profit. Okay? One is a day trade, and you can see this day trade essentially predicts this move. Oh, I see. You're right. I did hope. In sooth, I know not why I am so sad. I believe that was Antonio. What stuff 'tis made of? Where it is born, I am to learn. Yeah, cool. All right, so anyways, look at this. Can you sell here? Guys, can you sell here? Well, how about this? Is it smart? Is it wise to sell here? Okay. Okay. Luis, will it change the Fed's policy? If the answer is no, then don't worry about it. It's just another data point. Okay. People haven't lost their unemployment, so it's not a shock. All right, so if the answer is you cannot sell there, then the only other choice is can you buy it here? Okay? And what you have here is a range trade. Because the equal and opposite truth lives here, doesn't it? We know this is the buy zone. Okay? We know. So it comes down to your trade plan for the day, which I asked you to do yesterday, so we would have been sort of here yesterday, is to create a buy trading plan. So we know this is the buy zone. In my humble opinion, if you were a bull, you would have taken it in the Asia Open, as I teach you in the day trading course, and you would have dropped your stop and you're now done for the day. If you were up here, you probably didn't take profit because you were hoping for more, although this is a legit profit-taking area. It's just not a lot of money. Okay, 50 pips on a pound yen is embarrassing. Okay, but maybe you moved your stop. Well, if you moved your stop, now you just got knocked out of break even. And don't worry, there's no tears for that. If you picked up a -3 on this, it's fine. Job well done. You had an opportunity. You took the shot. You were profitable. You could have taken profit, but dude, really? Pound yen, 50 pips for a day trade? That's embarrassing. That's really poor. So you might as well just take the -3 because you have the opportunity to be great. Or not. Because you might say you won't take that type of risk until you break out. So this is sort of an intraday trade, and maybe, next week you'll be playing, if we're higher like we are here, then maybe you hang on for more. So maybe now in these current market conditions of still bearishness, 50 pips on pound yen is acceptable, but next week it's going to be minimum 150 pips. Dan says, I always struggle with stop loss places. Dude, that's the easiest thing, Dan. Check this out. If you buy, put your stop below support. If you sell, put your stop above resistance. Done. If you find out support or resistance is too far, you're like, dude, that's like 87 pips. Well, then put in a smaller trade, cut your lot size in half, and it's the same, right, as 43.5 pips. And you're like, okay, I could live with that. Okay? And you're like, but Wayne, I can't figure out where support and resistance is. Well, that would be the giant problem that you're facing, in my opinion. So you could eyeball it and say, well, I'm buying it here, so my stop must be below here. Okay? You should be able to do that. Or you could be definitional. And you're like, Wayne, what's the definition of definitional? And I'll say, that's a great question. Let's take a look. Okay? Check it out. See, when you're day trading, your pivots are going to tell you basically the same thing. I told you could eyeball this. But now what I'm saying is use a definitional term. So you buy it in the buy zone somewhere around here. Okay? Your target is going to be way up here. And where's support? Look, S1. S1. Support. 1. The closest level of support, by definition, is 150-115, so put your stop below support. Super easy, Danny boy. Super easy. Because when you're using day trades, what's it looking at? The high, the low, and the close. Okay? So guess what highs and lows create? Now that's weighted, so it's not exact, but it's very close. The high, oh my God, resistance. The low, oh my God, support. Oh God. You're like, well, that's easy. Oh my God, I never realized that. Well, but that's what pivot points do, right? Forex Noob says plus, but you don't need plus. Whatever. Right? It's one or the other, but I'm giving you the most basic, obvious. Dan's like, I always struggle. Well, look, there's no reason to struggle ever. So you following me? Now check this out, Dan. If you bought this, okay, your target is 152.46. And your stop will be right in here somewhere. Now, if you're a front runner, which you would be if you're doing this in the next few hours, you might be able to move this up and put your stop here. That's sort of like a pro tip. But I don't like that because you're still vulnerable to a double bottom. But what I would like to do is remove your risk as soon as I can. Okay. So if you get this working out, maybe you move even your stop here. Okay. And eventually you get it to BE. Okay. Now here's the next thing, Dan. If you get this right, it's a breakout. So next week's trade is going to be probably something like this. Meanwhile, your stop could still be here, or maybe you jammed it here. Okay? And now you're getting 150 pips. That's what you're going for. So let's say you're long at 151.50 on a pound yen. Okay? So you're long right here. Makes sense to me. Your stop needs to be around here, just below 151. Okay? So we're looking at, let's say we make it 150.90. 150.90. That's a 60 pip stop loss. And you might say, oh my God, I can't afford that. Then you don't have enough money. Okay? I can't afford 60 pips on the pound yen. You don't have enough money. You're over leveraged. Why don't you have any money? Maybe because you take giant risks. I don't know. Okay? So if you don't have any money, keeping your stop close is dumb. That's dumb. You're like, well, if I keep it really close, yeah, with a 90% chance you're going to lose money. What kind of, I don't understand the logic. So in this case, what you should do is cut your leverage in half. And now it's the equivalent of 30 pips. Well, now you can afford that. Okay? It's the equivalent. But then you're like, but I only make half as much money. Don't worry about it, bro. Don't worry about it. You sit here for 20 years doing good conservative trades like this. Don't worry about your money. Your money problems are going to go away. But then you're like, but I don't have time. Wait, you don't have any money and you don't have any time. Well, you should, I don't know, try magic or something. I don't know. I'm an economist, and I'm a finance guy. I believe in compound interest. Okay. Yeah, Dan, look, if you're long, put your stop below support. That's it. You're like, well, where's support? I don't know. That's your job, but it's not a difficult question. You could say, here, that's your entry, so how about there? But Dan, why don't you take FX Bootcamp? Join FX Bootcamp, take the training courses, because like an easy day trade, this is an easy day trade, by the way. Now, it may or may not have worked. Look, we got to resistance. Think of it this way, guys. You knew yesterday when I was teaching you that 152.18 on pound yen was going to be resistance. Check it out. Inside week, by the way. So now if you're in my swing trading group, you're like, oh, well, that sets us up to a fall all the way down to 151.15. I know, right? Okay. Okay. Yeah, so you finished that up. That's cool. Did you do all three? I heard the CFA level 2 had the worst passing rate or the biggest fail rate in the history of the CFA exam. So people got crushed. So maybe the test was stupid, or maybe people didn't study well. I can't study at home. It's too difficult. But anyway, so you got 1, 2, and 3? Yeah, but what do you got? I think when I did the series 3, I think the failure rate was more like 70, so it was about 30%. No, but no. But have you done all 3 is the question. Yeah. All right. Yeah. Yeah, so be careful. CFA people hate that. Oh, I just finished my CFA exam. Yeah, be careful. They hate that. They're like, dude, you're level 1 scum. Right, Dan? You're like, wait. You're not done your CFA. You just finished one of the exams. You're like, right? So anyways, yeah, be careful. I'm telling you, CFA guys hate that. They're like, you can't say you're done your CFA until you've done all 3. So anyways, what do you want to do with this, yo? Okay. Okay, this is CAD Yen. As you know, oil's been down for the last week or so. Yeah, Dan. I heard level 2 is actually the most difficult. So Dan can calculate for us the convexity of bond yields. So that's nice, right? Okay, so if we're going to look at that, we got to scooch over and look at oil. I mean, you can, but who cares? All right. Yeah, so here we are. This is our current situation. Okay, and that's why CAD is weak. Okay. Okay. And here's the context of where we are. Okay. What do you think? Is that going to be important? Probably. What about this area here? Probably mark that up. And probably this. Okay. I don't think we'll head down here, but why not? Now I'm looking. Okay. Ooh la la. Okay. What is it that I'm doing? I'm looking for prices in which I would be interested in buying or selling. So this is falling to 66. And I have a choice. Do I want to buy it at 66? Well, if I'm a bull, that's what I'm looking for. Is it going to fall to 66 today? No. I doubt it. It could, of course, but would I buy it at 66? Okay? So many people are consumed with what's going on now, okay, versus what's going to happen in the future. Now, the future. Now, the future. Well, if you were bearish, okay? Okay? If you were bearish, you would have been able to capture some of this price action long ago. Because you'd say, well, 75 seems to be resistance. Okay? And what did price do when we got near 75? Made a lower low. Made a lower high. Made a lower low. Made a lower high. Made a lower low. Made a lower high. Made a lower low. We'll make a lower high. We'll make a lower low. We'll make a lower high. Make a lower low. And then we say, oh, 66. What would you do if it made a higher high? Buy the higher low. And you should be focusing on this. If you're doing something now, reacting to the move in oil, you don't know how to trade properly. Man, why so many indicators? Let's see. Yeah, I don't need this. That's fine. I don't need this. Is that okay now? What is that? 4 moving averages? Is that better? Show me, what's the correct number? Good. Good. You see, it doesn't bother me to have the other ones. I don't look at them unless I need them, so it doesn't really matter. Well, what you're supposed to do, okay, is not buy here, okay? Not buy here, but instead of buy here. Okay? In this example, the lower low off of the resistance is what matters. So you sell here. And you're like, but Wayne, where do you sell? Okay. Now, some people, they want to feel like a bee stings them in the ass and says, sell! You're like, oh my God, I have to sell now. No, you make a decision. The lower low predicts a lower high. If you're a bear looking for, see, here's the money maker, guys. There's 2 parts of the money maker. One, you're a bear waiting to sell when you spot a reversal off of resistance. And then the money maker is you spot the lower low. Wait, you can't see it on this setup. Hang on, let me back up. Okay? Let's do it again. You're sitting around saying, man, I want to be a bear, but this is going up. This really sucks. Everything sucks. But my analysis says somewhere up here, we're likely to see a reversal. You see how in control you are? It's going up, but you don't want to buy it. Why? You're a bear. Look, if you're not a bear, then who cares? If this is falling, who cares? You're not on it. You have to get on a team, ladies and germs. If it's rising and you're a bear, you're not selling, so who cares? You're just waiting. And if it's falling and you're a bull, who cares? You got knocked out long ago. Who cares? Okay? So anyways, you're a bear and it's going up. It's clearly going up. Everything tells you it's going up. And you're like, man, I wonder what will happen when we get near 75. And then you see a lower low. Now you're like, crack of the fingers. All right, time for daddy to go work. Time for daddy to go to work. And you're like, I'm going to sell it somewhere between the 382 and 618 Fibonacci retracement. But then you're like, but I don't like Fibonacci. All right, so then you take this layer, or you take this layer, and you're going to fire for effect to the downside. And it goes up, 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 only for 6 or 7 or 8 or 9 hours. And you sell it, and now you're in boss mode. You're in boss mode. Okay? Cool. That's a good day trade. Look, there's the next one. Boss mode. Oops. Okay. Boss mode. Okay. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Notice that these are just day trades. They're just day trades. All you had to do was be a bear. Okay. Let's use my day trading bearish setup. This is only for day trading as taught in the day trading course. And you get this tool and you say, I'm a bear. So it's a bear day trading setup. And you're like, oh, okay. Do you sell here? No, probably not, but you can try. Maybe after the lower low, you get in the game. But look, when you're here, this says, oh, this is your selling price. And when you're here, it says, this is your selling price. Well, but you could use Fibonacci. Fibonacci does the same. You could use the moving averages. Dude, sell off the moving averages. That's fine. Okay? So you can use pivot points. You could use price action. You could use Fibonacci. You could probably use Elliott wave. You can use linear regressions, as you see here. Dude, it's like you got to get on the clue train. I don't care what tools. I don't care if you use 15 tools or no tools or some tools. But dude, you got to start analyzing and making decisions. Stop, quote unquote, trading. This is not Fortnite, this is Forex. And you could say, well, if I had only analyzed it from a bearish point of view using my day trading setup, I would have had easy trades, 1 per day. I know. Okay, I know. When is a good time to trade WTI? Well, I've already taught you guys that. There's videos, multiple videos on YouTube. Okay? And I think you'll find out it's right here. Sometimes it's a little earlier, sometimes it's, okay, but I like 7:30, even like 7 a.m. really. ET. And I do that for gold as well. But it don't matter none. Okay? Because here's what you do. Here's another way of doing this. You say, wow, what a great day in oil. Whew. I think I'll put a limit order right around here. And then you see the next day, wow, what a great day for trading oil. I think I'll put a limit order right here. And now we're way down here and you're like, wow, another great day trading oil. I think I'll put a limit order right here, somewhere around $69.28. Oh, that's a 7. 28 cents. So you're like, yeah, if it comes up to 69, I'm going to drop it like it's hot. Yeah, well, it might go up to 70. That's It's for you to decide. So you could use this. Remember, this is dynamic. It's going to keep heading down if this keeps heading down. This is static, okay? And then your Fibonacci is dynamic because you don't want to draw your Fibonacci until you see a green candle forming. And then you would say, well, here's your top, here's your bottom, here's your 3A2, here's your 50%, here's your 618 or something like that, right? Or you say, I'm going to sell it off the future 21, like you did here, and like you did here, and like you did here. So where's the future 21? Well, that's difficult because it's lagging and dynamic. So you can use a different tool. Okay, first of all, there's too many things going on. All right, so for those that want less, let's get rid of channels. Let's get rid of biased pivot points. Let's get rid of the moving averages so there's less clutter. Okay, and now let's try to predict where that 21 will be in the future. So I go insert indicators, custom, and we go zero lag moving average. Okay. She's a fatty. Input 21 with the 4 shift. Okay. You see that. Oops, not that. Is that the right shift? I wonder if that's the right shift. Interesting. I'll have to double check that. Anyways. Yeah, that looks even worse. So that's the EMA. Let's just double check these inputs. Visual input 21. That should be fine. I wonder what these other methods are. Probably looks better, but that just gets it back to a regular EMA, I believe. Maybe that's what it is. Maybe the shift is -4 and not +4. Well, that don't look right. Sorry, guys. It's interesting, even though this is set like I normally would, it just doesn't... Oh, maybe because of the 1 here. Maybe that's a little better. Anyways, what this is trying to do is cut out the lag. So I wonder if I can just do indicators, trend, moving averages. Oh, that's interesting. 21 exponential thin red. Okay. Yeah, it's just a little less laggy. So anyways, what is this saying? It says if this popped up right now to 70, you would sell it. Okay? That's all. Okay, here's the standard, right? Here's the standard, and then this is the zero lag. Now, the other thing that I did over time, okay, over time, a million years ago when I was trying to figure out trading on my own, Okay. I used a 5 EMA. What does the 5 EMA do? Essentially mimic the 21 without lag. Chand, the good part about creating a trade plan is you spend a lot less time in front of your charts. I used to spend a minimum of 12 hours a day. Okay? Right? So that's kind of why, if you look at my traditional setup, why I use things like a 5 and a 21. But you notice I don't talk about it very often, right? So here's the simple setup. The 8 is for a trigger for buying and selling. The 8 SMA open is only a trigger. So if you think about it, I'm riding the 5, and then I'll kick off the 21 later in the future. Okay? And the 5 is acting like a 0 lag 21. So whatever. Right? The 200 is just a fair market value. It's not really a trade. It's just more to keep me focused on, is this market bullish or bearish? Now, how do I know the market's bullish or bearish? Okay? Well, technically, the market became bearish. See, it's not an opinion for me. Okay? Right here. On the 30th of July. Oops. Okay? On the 30th of July. Okay? Now, is there an easier way? You say, Wayne, is there an easier way? And I said, there is an easier way. Okay, so now I go to a more complex, don't freak out on me, a more complex, okay, and I'll get rid of the Stokes, okay. What do we see here? Okay, right here is when I'm looking down here at the MACD. That's when the market became bearish. Okay? So in my book, I tell you your rules of engagement indicate that you can only sell this market. You understand? It's not the lower low. That would be a price issue. Lower lows and lower highs and higher lows and higher highs, that has to do with price. I'm not talking about price. I'm talking about the market. Okay? Would this be helpful for you or to you in your analysis? Well, at the very least, you could say, I'm a bull on WTI. This is WTI. You could say, I don't know if this is true, but you could say, you're bullish. But your analysis indicates the market's bearish. The market. So should a bull buy a bearish market? Only one that's broke. Okay. Forex Noob says, hey, do you use MACD for trending and stochastics for ranging? Okay. Let me solve this. If you got a problem, I'll solve it. Check out my hook. Well, my DJ revolves it.
Before we go any farther, you're going to have to understand what my charts look like and what they mean, okay? What I look at first of all is speed of the market. That's the market action. I use 2155 EMAs. Remember, we're using moving averages, all right? I use 2155. You can use 2060. Honestly, it doesn't matter. Don't get hooked on looking for a magic formula, okay? I'm just using medium-term moving averages. I like 2155. Now, for price action, or what I call momentum, we look at the 5-8 EMA, and the 8 is an SMA, but again, you don't have to get too focused on that. It doesn't really matter. I'm using short-term moving averages. That's all that mattered. Term, they're really slow, okay? Again, the 21, the dog, okay?
Okay.
No momentum. You're up against support, and you're...
So look at this. I'm going through each one of these and explaining it. Okay? Okay? There's 4 videos that are approximately half an hour each. How old was I in 2008? Jesus, Murphy, I don't know. Okay? I don't know. But it goes through all of them if you want to watch the playlist. Okay? And so it'll go through moving averages, oscillators, I think pivot points, and I don't know. There's 4. Watch them. Okay? How I guess when I did that video, I must have been, I don't know, 38. Okay. Yeah, 19 years old. Well, it's interesting. It's interesting to think that when I was 20, I think I was 20 years old. Right? I ran an organization of thousands of people with offices in 27 cities across the United States. And I sat on a board of directors with George Soros, but I wasn't old enough to buy a beer. So I got a pretty good start on life. Better than heroin anyways. How many kids have we lost to drugs that could have gone on to do something pretty amazing? It's frightening to think. There's a small business owner here in my city that I talked to about hiring people, and he says he doesn't like to hire white people. White guys. It's like a construction type business. And he's like, yeah, I don't hire white guys. You're like, wow, that's racist, right? But anyways, he's like, I don't hire white guys because they want too much money and they all have a drug problem. All of them. You're like, whoa, no way. It's like, never hire a white guy. You have to pay them way too much and they all have drug problems. Like, wow, no kidding. So anyways, I was blessed to not fall victim to drugs. So instead, I became an entrepreneur. Yeah. Yeah, William, that's probably the best thing about that, William, is that what you are learning and the way I'm teaching you. So I don't watch other traders on YouTube, but from your comments, from the community's comments, there's a lot of sort of hype trading. And I've done too much and I'm too old or whatever. I don't know. I'm not actually that old, but I'm just not interested in teaching you that. I know I'm losing millions of views because I don't hype it up. But I'm really interested, especially in someone like William, who might learn from me how to run a small business. because that's what I was helping people do before I was a Forex trader. I helped people raise millions of dollars for their high-tech startups. And I'd bring in coaches from all walks of life, lawyers, accountants, venture capitalists, speech coaches, marketing coaches, human resource coaches, and help my high-tech entrepreneurs raise money and run successful small businesses. Look, fast forward 25 years and I'm doing that for Forex traders. Same thing. I've always had a passion to do this. So I'd love it, when I'm 75 years old, that William is, 20 or 25 years into a career. Right? Yeah, Chand, it's kind of interesting. Like, what does that even mean, supply and demand? I mean, it's whatever. I'm not here to poo-poo on other people. Anyways, okay. So I hope I bring a business person honesty to trading that on the long run is helpful. Okay. Oh, that's interesting. So I thought I was going to be a lawyer. So my plan was, so I worked at NASA, as many of you guys know, and I joined the Navy to become an astronaut. They gave me the best deal. I interviewed with every branch of the U.S. military. And the Navy gave me the best deal, essentially Top Gun qualified and all that kind of stuff. And then I found out I was diabetic. So I thought, well, what do I want to do? And I thought lawyers were impressive. And I thought I would take the LSAT and be a lawyer. But I knew, I wanted to be a business law, maybe real estate, maybe high tech stuff. And so I was kind of falling into that path. And then I realized, honestly, I don't want to do contracts for businesses. I want to be the business. And so that's why I threw myself into the nonprofit world where I ran it like a business. And yeah. So anyways, so there I was at the age of like 18 or 19, which is pretty amazing, meeting with Fortune 500 CEOs. Pretty amazing, right? Really, really amazing. And so I bring all that to the table because, look, if I lived that life as a young man, I'm thinking of this one meeting I had with the CEO of Raytheon, one of the largest military suppliers in the world, right? And I'm sitting in his giant office. I'd called his gatekeeper, his secretary. I called her literally 47 days in a row. I did this multiple times with all kinds of businesses. Anyway, so I can think of this moment, and I'm sitting in his boardroom, and he told some jokes. It was really fun, and I ended up getting the deal. But why would I go from that dude to getting you all sexed up on flipping Dogecoin, right? Why would my life make a turn like that? So I know my webinars could be sexier, could be hotter, could be more exciting. I can throw in some trades and I can do all this kind of stuff and I'd get more views. But honestly, I'm not interested. It's just not it's like a clown act or something. I would rather teach you how to be successful. And the downside to that is it's hard work and it takes a long time. And that's just not sexy, is it? It's slow, it's arduous, it's painful, it's frustrating. And that's just not hot. You understand? It's just not hot. People are not into the hard work idea. But I think of the few that do show up, I think you are into it. I think you are. I think you get it. And I think you appreciate the honesty. But for some reason, YouTube won't promote the idea of hard work over long periods of time. Okay? But you know it's the truth. So anyways, we'll leave it at that. Okay? All right, so Bitcoin. Are you a buyer of Bitcoin? Okay? Well, if I were me, I would suggest that this is maybe turning. Of course, it's so new, I can't even really draw it. Okay? So here's how you put a trade together. If you are bullish on Bitcoin, then buy a dip. It's the first trade in a series of multiple trades. If you get the turn, we don't know. So therefore, you're going to face some risk. Okay? So you need to measure from here to here and have some price in which you would be interested in buying. It could be this price, but this is dynamic. It might float a little higher. You could use Fibonacci, okay, and say, you know, this is probably a 382. This is probably a 50%. This is probably a 618. But you notice how it's all kind of the same? Or you can use this moving average, okay, as it's moving up over the future, which means you buy like this. But you notice, or you might notice, that you end up buying it at the same price for multiple different reasons. The money, the value you create is that you've decided to be a bull and that you have the patience and discipline to buy a dip. Okay? Thank you, Sammy. Thank you, Thiago, too. He says, I searched Forex channels for 9 years, and this is the best. I appreciate that. All right, so let me ask again. Are we going to meet up in New York City next Friday, 10 days from now or whatever? Will you give me an opportunity to buy you a drink and stuff an hors d'oeuvre in your mouth? And then you can say, hey man, thanks for coming here. This is really good. Johnny's already got it. Oh, is it Friday the 13th? You're kidding me. Oh, that's cool, man. Ow! Hey, but Johnny, rumor has it, I have to verify this, that for us to get into restaurants and bars, you might have to bring proof of vaccination. That like New York City's changing the rules. Okay? 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 Yeah. Anybody else, New York City? So Johnny, yeah, so Johnny and me, that's cool. Jim's like, hey, if I'm out, if they let me out, if they let him out early enough, I'll come down. I got to send an email to everyone that showed up last time too. We had such a good time. It was really good. In a couple of years, Becker? Yeah, well, I'd like to travel more often. Yeah, I'll do Miami. I'm definitely interested in Miami. Casual business. Right? Like I have a collared shirt. Check it out. I got the white pants with the brown belt and the brown shoes. Right? And the boomer socks. Right? That would be appropriate for the Harvard Club as casual. Okay? It's casual, right? That's casual. Again, I'll show you guys where we're going to meet. Harvard Club of New York City. Okay. This is members only, can't buy your way in kind of place. So yeah, I'm as casual as probably you can get. And likely, I might even have a jacket. By the way, that elephant is the... Oh, can I back this up? No, I can't. Wait, you'll see there's an elephant. It's on the opposite wall that you can't see in this picture. Hang on. Wait for it. Okay. Oh, wow. Different pictures. All right. So where did it go? Okay. Wait for the elephant. Wait for the elephant. There it is. See? There it is. That's a real elephant that Theodore Roosevelt shot and killed. And it's the only one legal in the United States. Because he's president. He can shoot it. So anyways, this is where we're going to hang out. Dress code. Business casual. This is neat. This is where the library is upstairs. Casual attire in good repair. Business casual required. Business casual. No jeans. Wait. I don't know what that means. Anyways, wear a collared shirt. Yeah, whatever. Yeah, all the Roosevelts were there. And then let's see if this has... all right, here's the rooftop bar. I don't think they'll let me in. All right, I had to log in. I don't know why they make you log in to see. But anyways, the rooftop bar, of course, that's not a good picture. Like, why don't they have a picture? It's so funny. People is stupid. Where did I see reservations? Weekdays, jeans in good repair. Weekends, no. The accepted standard for casual business attire for men is collared shirts, but without jackets and ties. For women, an equivalent standard. All right. So you don't have to have a jacket, but you should have a collared shirt. Yeah. Cool. Okay. Anyways. All right. So, right, one way to do this, if you want to, there's many ways to do it. You can do it this way. Okay. You see? You can say, well, I want to be in it faux show, and that's a 3A2. That's a role reversal. It's a central pivot. Whatever. Okay? That's your call. Okay? I also recommend in the day trading course, I give you the auto stop. Okay. And that means when you do something like this, if it comes down and price is touched and, okay, your working order is converted into a market order, then the auto stop will put the stop and the limit down automatically based on your settings. Okay. And you can see it's right there, smiley face. And if you forget what the settings are, you can go here and you go, oops, let me do it here. You go here and you go properties, and I have a 50 pip limit and a 25 pip stop. Of course, you can adjust that. Okay. Or you can have preset ones. I don't know if this one has got one. No. You can have preset ones. So you can have, like, for swings, you could do like 100, 300 OCOs. For day trading, it could be $33.99. Okay. So in the day trading course, one of the things that we work on is your 99.33 OCO trades. Okay. So if it came down to hit, it would put a stop 33 pips below and a limit 99 pips above. Okay. Now this is crypto, so you'd have to adjust properly, but that's the idea. Okay. So again, I highly recommend over the summer, you're practicing things like how to day trade. Okay. Gold is at the top of the range now. Okay. If it breaks, we're going to go to 1872. Done. Let's go take a look at some of the yens. Okay. Yen, Oscar Mike. What do we know? I had this on the other setup, didn't I? Let's see where I had it. CAD yen, no. Where did I have it? This one, maybe. No. I don't think it was this one. I don't remember. I already set this up for you guys. So let's just go back to this one. I don't remember where it was. Okay. Okay, something like this. Maybe I think I messed around with the template. All right, so good. What do you want to do? Okay. Was this the one that I said that you cannot sell here? Well, definitely good advice. Okay. Okay. This is a swing, long, and this is a bullish exit. Okay. Not for me, KG. Okay. So the question is, will you buy it down at 152 tomorrow? See? $150. Oh, this is the one I said, yeah, 50 pips is embarrassing, right? Yeah, that's right. Okay, 152 would be it. Look, that's why I draw this, guys. Okay, you're already done tomorrow's trade plan. Oh, Isaac's in the swing trading group. Awesome. Kevin also said, how's that class coming along? I'm done everything. Right? I'm done the Oxford program. I'm done the MIT program. It was a good summer. I didn't waste my summer. Cool. So now we have to see, is there going to be a catch-up effect? Will the CAD yen go from weak to strong? Okay. I don't think so. Should I put my templates on TradingView? I don't know. Okay. Does this change anything, guys? No, not really. Oops. Okay. Does it change anything? I don't think so. Let's change the template. Okay. The more interesting part to me is this bounce predictable? Okay, let's see. This is the weekly sell zone. This is the bearish exit. Okay. So what do you think? Is a bounce predictable? The next thing is, does it mean the trade is, the downward pressure is over? I don't know about that. Okay. So be careful. Make sure you know what you want to do. Oops. A little too thick, I think. Okay. Make sure you know what you want to do. Do you want to buy this? So basically, you want to buy a dip at 87. I think that's what you're telling me. And what you're doing is you're connecting these, okay? And it's another form of saying you want to buy low. Maybe tomorrow. Right? The fact it's going up now is irrelevant. Okay? Because if you were a bull, down here on a smaller time frame is much more interesting. And now that you're here, this is like a horrible place to buy. You are buying high at resistance. So maybe you have an opportunity tomorrow. Okay? And maybe next week. That means you're planning ahead. That means you have a strategy. It means you have discipline and patience. Oh my gosh, those are the things I think we all agree that will lead you to success in Forex. Thank you, Hope. Well, Hope, when we start with iambic pentameter, I think it's a good day. So thank you for that. So thank you for being here. Thank you for subscribing. Please click the like button. Please leave a comment on the video. Do what you can to tell YouTube that this is quality content and it should be promoted to other foreign exchange traders. And a thank you to Traders Way for being a trustworthy foreign exchange broker for us. Maybe give them a shot. Peace on earth. May the pips be with you. May your profits be above average. See you tomorrow. Cheers.